Give a man a gun and he will rob a bank. Give a man a bank and he will rob everyone. Nirav Modi defrauded public sector bank Punjab National Bank of 11,400 crore and fled away to London. Later it was the turn of a cooperative bank who gave 4,355 crore worth of fraudulent loans. When the borrower HDIL was caught in a scam, it dragged PMC Bank down with it. This time a private bank, Yes Bank, needed a 10,250 crore bailout package after many of its corporate lenders who were given loans despite their precarious balance sheets defaulted around the same time. Guess who paid for all of this? That's right, the taxpayer, you and me, every single time. The 11,400 crore hole left by Nirav Modi was refilled with taxpayers' money as the government guarantees all deposits in public sector banks. While in cooperative and private banks, technically the bank and its depositors lose. If you look closely in the case of Yes Bank, its growth mainly enriched the promoters when things were going well. But when a bailout of 10,000 crore was needed, a consortium of banks led by the public sector SBI gave it 7,000 crore. With what else? Taxpayer money. With the exception of SBI, the government has repeatedly recapitalized 18 public sector banks with your and my money, giving 2.5 lakh crore in just a 5-year period, more than the value of their total market capitalization. In an effort to solve this long-standing issue, in 2002, they set up what are known as ARCs, Asset Reconstruction Companies, under the Sarfaresi Act, who took away all bad loans, aka toxic assets from banks. And much like a kabadiwala in your locality, sold the assets at a discount to recover whatever they could, leaving the bank's books clean so they could start lending afresh and not be weighed down by old debts. What happened? More dubious loans given, more bad loans, and books becoming toxic once again. When everything is fine and the economy is booming, sometimes even dubious loans may come good. But if they don't, banks had a strategy called restructuring. All they did was kick bad loans down the road by adjusting the old loan against a new loan which would mature when someone else was in charge. Rumors suggest that the system was misused in Maharashtra's sugar belt, when sugar processing units borrowed huge money from local cooperative banks and defaulted, citing adverse market conditions, but actually siphoned off the money, then set up a new company under another family member and bought back their old company in a rigged auction at a much lower price and with a clean slate. RBI classifies nearly 1.9 lakh crore of bank loans as fraudulent. And it's no surprise that public sector banks account for 80% of them and are by far the most at risk with the largest amount of NPAs. The cleanup of the banking system started under Raghuram Rajan in 2016 and was carried further by Urjit Patel and present RBI Governor Shaktikanta Das. When the RBI got strict and stopped these cover-up practices, the Insolvency and Bankruptcy Code IBC was passed, forcing defaulting companies to either pay up or be sold. Under the judicial oversight of NCLT, the National Company Law Tribunal is specially formed for this purpose. One of the success stories under IBC was that of SR Steel, which was bought by ArcelorMittal, allowing lending banks to recover 90% of the 42,000 crore it owed. Unfortunately, several of the 3,182 court-appointed insolvency resolution professionals in charge of turning around stressed companies under IBC have been threatened, arrested on false charges, and even roughed up by promoters trying to delay or thwart the recovery process. RBI forced banks to classify dubious loans as NPAs, non-performing assets, that is, those whose interest payments were delayed by over 90 days. With a further classification as SMA-1, special mention accounts, loans due for 31 to 60 days, and SMA-2 for delays between 60 to 90 days, one step before NPA. Because of these strict rules, and now especially after a second lockdown, RBI foresees a huge spike in NPAs from 7.5% in September 2020 to as much as 14.8% in September 2021. Consumer loans and small businesses are more at risk now after Corona, where previously defaulting corporate loans were responsible for a majority of NPAs. The bad bank being set up, however, is not for consumer loans but to tackle toxic corporate loans and is being seeded with 15,000 crore rupees, of what else? Taxpayer money. In the first phase, Indian Banks Association has identified 102 NPAs, each of over 500 crore, worth a total of 2 lakh crore that have been lying in banks' books for years. But before that, it will force the lending bank to have a haircut, that is, make them agree to sell the toxic asset at a discounted price to the ARC. Typically, the discount is as much as 40 to 70% of what is in the bank's books, less accumulated interest, a common practice in the finance industry. Once the toxic asset is reasonably priced, the bad bank is likely to offer about 15% upfront. And the government is thinking of offering
sovereign guarantee for the rest?
Sovereign guarantee means taxpayers' money. What else? But even at that discount, the 30% average recovery rate experienced by the 29 existing ARCs shows that it is still not a profitable exercise. In fact, the only time ARCs have been successful internationally is when they were especially formed to tackle housing loan defaulters, aka subprime mortgages. Homes are simple assets with the loan value relatively small and the property clearly identifiable and saleable. In India, bad loans are largely due to unviable infrastructure projects, restructuring of previous loans, or where they have been siphoned off. Mexico, Brazil, Argentina, Italy, Greece, Turkey, South Korea, Thailand, and Indonesia all failed after setting up ARCs. However, Malaysia has had some success with its similar Dhanatra scheme in the aftermath of the 2008 Asian crisis, where it met its projected lifetime recovery target of 30.35 billion Malaysian ringgit of the 52.5 billion it had purchased, recovering 58%. The publicly funded Korean Asset Management Corporation started buying stressed assets in 1997 and managed to dispose 2/3 of them within 5 years. Camco's success was because of its ability to make a market for bad loans by repackaging them and attracting international investors. Citi Holdings in 2009 took over the toxic assets of Citigroup and even ended up making a profit on it after 7 years. Though the 2021-22 Union Budget did not allocate any public funds for the bad bank, it is taxpayer money from public sector units that will fund this ARC. Much the same way, tens of thousands of crores of taxpayer money has been pumped into Air India and other loss-making PSUs. Merging of public sector banks has been tried in the hope of creating a stronger company. First, Vijaya and Dena Bank were absorbed into Bank of Baroda. Then 10 more public sector banks were merged last year, leaving just 12 PSU banks in all. But the burden of bad loans still remains undiminished. Of the 8% of 1,942 cases resolved under IBC, a decent recovery rate of 43.5% was observed. India's sincerity in cleaning up the system is attracting alternative investment funds, AIFs, and international private venture capital and hedge funds. Viral Acharya and Raghuram Rajan, Deputy and Governor RBI respectively, have both argued for using modern methods to solve age-old problems.
India needs to create an online platform for selling bad loans,
where a public credit registry can vouch for the genuineness of corporate loan seekers, similar to what CIBIL is doing for individuals, while easing the sword of vigilance agencies over the management team of the bad bank will allow them to take innovative decisions. Unless learning and processes are enforced, bad loans will fester, new NPAs will surface once again, leading to a repeat of the cleaning process and a waste of taxpayer money. Unfortunately, those that knowingly gave away our hard-earned money have got away scot-free. Bisbo's limerick. The bad banks are coming to clean up the mess left by bankers who will never confess that they played lax with rules in a system for fools where the taxpayers are the ones who are left in distress. Do join Bisbo on Discord and follow us on Instagram at GoBisbo. Subscribe to Bisbo and click on the bell icon to get notified whenever Bisbo releases a new video. Sources of all our information is listed in the video description section.